Hi, this is a video recording for Patty and Friends cash budget question. So the idea of doing one of these is to help you understand how to create a cash budget, what information needs to be put in the cash budget, and how to do the corresponding input schedule, accounts receivable schedule, accounts payable, GST receivable, and also cash budget. Now, when you get one of these questions, the first thing to do is obviously determine what type of information needs to go into the input schedule. All right, and in doing that, obviously all the information that is provided within the stimulus question needs to be put in there. It doesn't really matter what order it goes in. Okay, so I've actually started with bank balance. Okay, and you can see here on this stimulus question that the bank balance was $500 in January, and it's a debit. Okay, so that basically means with the debit that it is actually a positive number, which is why you put the positive number at the end of January. Okay, you can put it in February if you like, for the beginning of the month, okay, that you're actually doing the budget for, as long as the number actually gets in there. And then it's obviously just going through all the other information that you actually get. So I've put in the other expenses, which are over down in here. Other expenses are $200 per month. That includes depreciation of Palm Pilot, okay, and other things as well. So with that depreciation, it needs to have its little separate item, and then that depreciation gets taken out in the GST schedule and also in the cash budget. It's also got accounts payable, which, as it says, is 10% of the actual credit sales, 10% of the total sales. So do not actually calculate that in your input schedule, just put the percentage. If there's any calculations in this input schedule, you actually get marked down. And then clothing, always put GST as percentage. You're always going to get a property, plant and equipment, okay, and then a percentage paid in various months as well, and also credit sales. Now you also need to put the accounts receivable in there as the collection period as well, in order to ascertain the schedule of accounts receivable. So all the information that needs to go in there should actually be in the question. So you're going to get things like cash sales, credit purchases, cash purchases, or any other types of expenses as well. For example, wages, depreciation, other expenses will always have included in them depreciation. So the name of the template will also be cash budget. The file name be the file name of the question, your name, and also the creation date it was actually done. And that should be all those needed for the input schedule. Next thing we're going to do is the schedule of accounts receivable. Now the first question people always ask is what months can actually be put across the top here. Okay, I've got January, February, and March, all right, but the question actually tells you to do a budget for a period of time. And it says here from February to March 2007. So therefore, that is the month that always go up here, February to March. So usually in an exam, you'll have 3 months, okay? So therefore, you'll have those corresponding months as well. The question will always tell you what months to actually do it for. And usually, these ones down the side here will always reflect how many credit sales you get. Okay, so we've been given credit sales for October, and there's November, December, January, February, and March. So therefore, always those corresponding months get put over there as well. Now, the next thing to do is to put in the credit sales for the corresponding month from the input schedule. Now, in order to do that, always start a formula in Excel using equals, go over to your input schedule, and then find the credit sales for that month. And we're doing it for October. Now, the one thing you can also do in Excel is to determine the actual, what is called cell absolute referencing using the $sign. Now, the $sign usually put in front of the actual row. In that case, that is the number, or the column which in case is the letter, wherever corresponds with the actual numbers. Now you can see here in the input schedule, our common denominator is the actual row. Okay, in that case, the number 16. So therefore, the $ needs to go in front of the actual 16, like I've done. Then you can actually drag it down, and rather than swapping and changing, you then just swap the month. So from C goes to a D for November's sale. December goes from C to an E. January from C to an F. And February is from a G. Always check that you've actually done that right. So we'll go back to February's credit sales to determine that's actually in the right column, being G16, which it is. Okay, the next thing you need to do in order to determine the credit sales is to determine of this $1,000 credit sales that was in October, how much of it obviously relates or will get actually received in the months of the cash budget that we're doing it for. So for example, do we actually receive any of this $1,000 in February? Do we actually receive any of this $1,000 for October in March? In order to do that, you need to go back to your question and look at when history tells us we actually received the money. Now you can see here, first month after the sale, we'll receive 30% of the debt. Second month after the sale, 40% of the debt. Then third month after the sale, 30% of the debt. Okay, so it's just a matter of counting how many months before October is February. So we got November, December, January. Okay, so October falls outside the month of February and also March, so we will put $0 in there. And then we'll work out for November. So November, we got December, January, February. So we are going to receive 30% of that $1,500 in February. So it's a matter of just going equals $1,500 times, go back to input schedule, and then click on the 30%. And do we receive any of November's and March? So we got December, January, February. No, so we'll put a 0 there. Same thing for December. How many months is December before February? So we got January and February. So it's actually 2 months. So we go equals 2 months times, go to input schedule, click on your 40%. And March and December is 3 months after March, so we go equals your $2,000 again times your 30%. January is 1 month before February, so the 2,500 times your 30%. Again, March is 2 months after January, so equals 2,500 times your 40%. And we don't really worry about April at all because the question specifically only asks for a budget from February to March. Okay, February, we won't receive anything in February. And in March is 1 month after, so it equals again, start your formula, 3,000 times your 1 month. So always, in your input schedule for accounts receivable, you'll always have the following information that you'll need: collection period and also your credit sales for the various for all months. So your credit sales are on this column here, and this column represents the budget you're actually doing it for. Okay, the next thing, auto sum, just auto sum it up. Okay, easiest way to do that is to use the auto sum function key, okay, or to actually type in the formula itself. Okay, always remember to go from the first month and drag it down always into the last cell, and then close your brackets and then drag that across. So marks will be lost in the accounts receivable section for the following: not using the actual dollar signs, putting in the wrong months, and also usually a common mistake is using the wrong collection period in calculating the various months as well. The next thing for accounts payable. Now, in order for accounts payable, the following information you'll need for accounts payable is usually credit purchases. Sometimes we might say accounts payable in the question. Okay, and always, regardless of what question you actually use, the purchases are always made in the month after. Okay, so again, we are doing the budget for February and March because that's what the question tells us to do. So because we're doing it for those 2 months, the only months we'll need along these ones here are January and February. Okay, so to get the credit purchases, the information that you'll need from the actual question, it tells you that the credit purchases are 10% of the total sales. Okay, so in order to get that, we're going to go to equals, go to your total sales from your input schedule for January, and then times it by your 10%. Now always remember also your use of absolute cell referencing. So because they're in the same row, okay, dollar sign before the 16, which indicates the row, and because we want to use the same cell for the 10%, we're going to use a $2 signs before and after the actual dollar, the B. That tells Excel that when we actually want to drag this down, that we are going to use the same cell for that 10%. And just remember just to change the actual column itself. Okay, so we are going to pay January in February and February's in March. Now the next thing we need to do is to do the GST schedule. Now all the schedules, this is probably the hardest one that you'll actually do. Okay, again, these columns represents what months the question is actually asking you to do. So again, it will always be February and March. Okay, and then you need to determine which accounts are revenues from here and which ones are expenses, and also to determine which ones actually have GST attached to them. In order to remember which ones have GST and not have GST, the simple thing that I use is any interest does not have GST, so that could be interest received or interest payable. Wages do not have GST. Any taxation does not have GST. Depreciation does not have GST, and you have to take that out accordingly in other expenses. And any bank charges as well does not have GST. Okay, any other revenue or expense that is not on this list will have GST attached to it. Now, the first thing you need to do is obviously to determine what months actually go in these columns here. Now, the rule of GST is the following, and it says in all questions, GST is paid to ATO the month after receiving it. and paying it. So we're always essentially a month behind. So what that basically means is January's will be paid in February, okay, and February will be paid in March. Okay, so you need to work out the GST for January. Now the easiest way to do that again is to go back to your input schedule and to get the total sales for January. Okay, and again use the referencing and drag that down, and that will change to a G. Okay, so the next thing we need to do is to work out how to actually take the GST out of the gross sales, because these represent gross amounts received. In other words, it includes the actual tax. Now to do that, we go equals. Divide that by, open your brackets, 1 plus 1 divided by, go back to your GST and close your brackets, press enter. And then again use the cell referencing, because we're going to use that 10% and drag it down for the other cells as well. Now essentially speaking, you only have to do this equation once and you can drag them down. So we're going to press Control C to copy, Control V to copy as well. Okay, now the only thing you need to obviously change is change that C over here to a B. Press enter. Now, if you look on the actual question, on the input schedule, we've got revenues of credit sales and no other revenues at all. So therefore, the total amount of GST that we've actually received from all our sales for that month is just coming from sales. Okay, now sales in the GST, you need to include the cash and the credit as well. Okay, so we need to sum this up. And then drag it across to include March's. Okay, common errors that students actually make, as I've just demonstrated here, is not to include all the cells. So you need to make sure that you actually drag it down to include all the cells. Otherwise, you might not pick up all the revenues in here. So, for example, you might have other revenue here as well. Now, in terms of input tax or GST paid, you're going to have purchases, okay, usually other expenses, a capital payment, okay, so that could be any form of property, plant, and equipment. In this case, it's an actual car, all right, and any other general expenses that they actually might have incurred as a business. Now, to get your purchases again, we need to go back to the input schedule. Don't need December's at all. And we're going to pick up January's. So equals. And it is worked on the total sales times the 10%. Okay, again, always make sure you use most efficient formulas in Excel through the use of dollar signs. Okay, and we can drag that down. And again, just change that F to a G. Now, instead of actually rewriting that whole formula, all we need to do is copy this, drag this down, and to paste it in there. And you'll see here that it's actually done it all for you because you've used cell referencing. Always make sure that you're using the right column, okay? And in Excel actually tells you what column you're using. In this case, that is correct. Again, just copy and paste it across. The only thing we need to change is going from C to a B. And other expenses. So in this case, we've got other expenses here being clothing, okay, the capital payment in the form of a Cortina, okay, and other expenses as well, which need to go in the GST. And because it's always the month before, we are picking up January's clothing and bling. Okay, so in this case, we go. You can copy this across, Control C, copy this down, and it's just a matter of changing this cell here. Going back, we're picking up January's clothing. And pressing enter. Putting a dollar sign in front of the 13 and then dragging that across. Now, the tricky part with other expenses is that in all of these questions, because you're getting assessed on KPP, it will include depreciation. Okay, so we're going to have to take that out for the GST. So to do that, equals, open your brackets, go back to import schedule, other expenses for January, minus your depreciation, divided by, open your brackets, 1 plus 1 divided by, get yourself for your GST, close your brackets. Now, of all of those formulas, this is probably one that students do poorly because they forget to take out the GST. Again, dollar signs in front of the row, okay, and also dollar signs for the GST as well. Okay, and then drag that across. Now, the second thing that students usually do wrong is any of these questions, you are going to get a capital payment. Now, that capital payment could be property, plant, any form of property, plant, and equipment. So in this case, we are buying a car. Now, it says in all the questions that you purchase $1,500, 20% deposit will be paid in February, with the balance will be paid in March. In other words, the 80%. Now, because with GST, we're always a month behind, so in February, there will actually be zero, because we actually, depending on when we purchased purchased the actual car. So assuming in this case, and it should say in the exam that it was purchased in January. So we are going to put the 20% in February, okay, and then the 80% in March. Okay, so in order to do that, equals again, open your brackets, go back to the input schedule, get the price of the Cortina, times that by your 20%, close your brackets, divided by 1 plus 1, and then close your brackets. Okay. Says 20%, sorry, so in this one will be 80. Okay. Again, make sure you put your references. Okay, and then drag it across. The only thing you'll need to change is just to make sure that you've got the right column. So we're looking at G15. And you'll see there that the actual cell reference is in F, so we'll have to change that. And also check the H15 as well to make sure we've got the right percentage. And it is. Now that is all the expenses that have GST paid into them. So you do an auto sum again. Make sure you're picking up every cell, then drag it across. Okay, now to work out the GST payable or receivable, and we need a positive number here, you figure out which one is the bigger number. So with the GST collected, that basically represents the amount of tax that we've collected from our sales, and as this is not our money, we have to pay it to the ATO, so it's looking like we're going to have a payable, okay, because what we actually paid out in tax is less than what we actually received. In order to work that, it equals your bigger number minus your smaller one, and then drag that across. Okay, now the next thing, in order to obviously get bonus marks, is to do what is called an if statement. Now it's very important that you do this if statement in order to represent where this 105 and your 36 actually goes. Okay, so to start the formula equals if, and it will always come up with a test. Alright, so I always start with the GST collected. If that is greater than what you actually paid in tax, if it's true, we are going to have a GST payable, which basically means it's going to go in the payment section. If it's not, it will be a GST receivable, which means it'll go in the receipts section. Okay, now we've got payable in both months. So in the cash budget, you'll actually see a payable. And that's all the GST done. And the next thing you need to do is to do the cash budget. Okay, and again, you do the month that go along here is the month that the question tells you to do, and then you outline all your receipts. Okay, now you could have cash sales, you could have rent, you could have interest, you could have any other form of revenue in here, but this question only has credit sales. Okay, now these credit sales in all questions, they come from the schedule of accounts receivable for the month. Okay, so you go back to your schedule of accounts receivable, click on the month for February, and drag it across. Any other revenue that you have, for example, you might have cash sales, you'll always, or rent or anything like that, you will always get all of that revenue from your corresponding input schedule for that month. So for example, if we had rent revenue in here, and we had $150 in here, you'll then need to add it in here as well. Go back to the input schedule, and it's always for that month. that is for cash sales as well. But we don't have rent and revenue, so I'm just going to leave it. Now, the next thing is you total it up, again using AutoSum. And then, so we've got total estimated receipts for February and March of $2,000 and $2,500. Now, the next thing you need to do is your credit purchases or your accounts payable. You can, depending on which you'd like to call it. So we go, and this comes from the schedule of accounts payable. So we go equals, click on February, drag that across. So this basically says that for February and March, we are going to pay for credit purchases $250 and $300. This always comes from that schedule. And then it's just getting the other items from the input schedule. So clothing for February, okay, drag that across. Other expenses, which is less GST. Again, it's for February. Drag that across. And you'll always have a car repayment as well. Now that car repayment basically represents the payment that you'll make for that month. So it's equals, go back to your input schedule, and it's the 1500 times whatever percent you pay for that month. In this case, we're paying 20%. Okay. Again, you'll need dollar signs. And drag that across and make sure this is actually picking up the right percentage. So we're making 300 in February and 1200 in March, and that makes up 100%. And this GST will come from your GST schedule. And because it says payable, it's in the payment section. And then sum these up. Now, the next thing you need to do is to work out what is the beginning and what is the ending cash balance. Now, the cash balance for the beginning of February, it will tell you, so go to the input schedule, and it was $500 debit, which basically means we've got a positive amount. Now, the next thing you need to work out is receipts over payments or payments over receipts. Now, in order to determine that, you look at what our total receipts is and what our total payments is. Now, since we've got more receipts than payments, it will go in the receipts over payments. So equals minus your payments, and that will be 0 because our payments are not bigger than our receipts. And then your cash balance is just summing up your opening plus your receipts over payments and your payments over receipts, which case is 0. Now that 745 then becomes the opening balance for the next month. And then in this case, our payment is bigger than our receipts. So our receipts over payments will be 0. Okay, and this one here equals the 2.5 minus your total payments, and we want a negative figure to reflect that we've paid more money than what we've actually received. Okay, so our ending balance is $409. Make sure you save as you go along, guys, because you never know what happens in Grace Computers. I hope this helps. Okay, if you have any questions as well, you can always email me or see me during lunchtime. Thank you.